Hi, folks. Dan Bird here with the Daily Scan for January the 14th, the day before the inflation report. And market was undecided today, kind of going up a little, down a little. Didn't actually go down as much as I thought it might. So maybe that's going to be good news. Everyone should be prepared for a 2.9 number tomorrow. If it comes in better than that, and actually the market may actually take off. So we'll see. Today is Tuesday, so Technical Tuesday, as I typically do every Tuesday. I cover a technical indicator, talk about how it's put together, how to use it, show you some charts and how you can implement it if you want to use those kind of things. At least it gives you a little bit of education on some of the indicators that are out there. As always, I'm not a financial advisor, so you need to understand your own risk profile and trading style. Take responsibility for your own trades, and this is strictly for educational purposes only. So let's take a look first at what the market did today. And if we go here on the home page, we'll see the market bias went down slightly today. So not too much, just a little bit. So there were some more bearish signals than bullish signals, is what that means. We still have a red light in the market timing graph right now. The NASDAQ, we'll look at the NASDAQ on the zoomed out chart. And you can see right here, it's still following this trend line down. It broke through the support line right here at 21.1. It's below that right now. It's still above the gap, the open gap right there. However, if we look at the S&P came right down into the gap and bounced yesterday and kind of hung in there a little bit today, pulled back some, but didn't really sell off significantly today. So we'll have to see if it can hold in there. I think the market's kind of treading water to see what that report's going to be tomorrow. If it does come in at 2.9, I think it's going to send things lower. That's my guess. So we'll see. Plus, we've got options expiration coming up on Friday, which I talked about yesterday. Anybody that's interested in understanding max pain and how options expiration can affect the market, take a look at my video from yesterday. I covered all of that. Let's go in a little bit closer using the market bias matrix. So this is what the that little chart is made up of. It's indexes, sectors, industry groups, relationships, relative charts, commodities, metals, and currencies, all that put together on a short-term, medium-term, and long-term basis. And all of that then rolls up into a percentage bullish number up here in the upper left. And that's what this market bias chart is all about. Basically just tracking this percent of all of those things that are bullish over time. And you can see it went down slightly. I think it was 53% yesterday. It went down to 52. So not a big drop, but certainly is continuing to trend lower. So we need to be careful. You can see all the red that's on the chart right now. Technology actually gave a medium-term down signal today. So the green areas is commodities. Commodities have been zooming higher. And actually, as we head into CPI tomorrow, I want to take a look at commodities. I haven't looked at these lately. On the charts page, on the left-hand column, under let's see, under economic charts, commodities are right here. And that's what it looks like. It's actually going to be for December. So we can move this highlighted area over here to December. So that's what the CPI report tomorrow is going to be reported on. And what you should notice is that food, so DBA is made up of all these components over here on the left. And for the month, it has gone significantly higher. So that's this one here, DBC, which is way up here. These are the moving averages down here, but the actual number is way up here. So these are all these components: crude oil, gasoline, natural gas, soybeans. So it's a combination of food, metals, and gas and oil. So it's much higher. It's actually as high as it was back in October. Food is higher than that. Copper is starting to move up this month, but kind of went sideways. Let's move these arrows over too. So that's what it looks like for the month. Here's what copper did, kind of went sideways, a little bit down. CRB went up for the month and it's continuing to go higher. And then oil and gas, those are the key ones down here. Gasoline, oil, I dropped off the chart somewhere. So, oh, there it is. Oil is way up here. So these are the two that actually probably are going to affect it quite a bit, although owner's equivalent rent is a big part of CPI. So we'll see how that affects it tomorrow. But oil and gas went up. So everything, all the commodities are looking higher. So that's probably one of the reasons why it's coming in at 2.9. You can see the CRB is agriculture, energy, and metals over here on the left-hand side. So this is peak inflation way back here in 2022. That's where we hit the highs right there. And right, this is mostly oil and gas. So oil and gas is pretty far down, but food products are right back up back to the 22 level, actually higher than they were in 22. So I think that is not going to bode well for CPI tomorrow. We will see, but I think that 2.9 number probably is going to come in accurately. The market won't like it. And what's even more worrisome is even after the end of December, all of these commodities are just screaming higher still. So next month's CPI, even though we're rolling off a big one off of the 12-month average, it looks like prices are actually going higher. So that might not help us next month. Normally it helps by bringing inflation down, but next month that may not help. So keep that in mind. If you want to just check this out, it's on the website under the economic charts right over here, along with a whole bunch of other things. CPI, headline CPI is right there. We'll look at that after we get the number. So that's what it looks like. All right, so I did have a question about inverse ETFs. I'm going to cover that tomorrow. I'm going to do a whole segment tomorrow. I actually did a presentation and I have slides for it about inverse ETFs. So I'll explain what they are and how they work. And I will do that tomorrow. But today is Technical Tuesday. So today we are going to talk about Chandelier Exits. So this is on stock charts. So if you go to the stock charts page, actually, before I do that, let's take a look at the dashboard real quick. So you can see the Dow and the S&P actually were a little bit higher today, and the VIX came down a little bit. But you can see how volatile it was all day today. Down, up, down, up. We'll see what happens tomorrow. That's what I mean by I think it's just waiting for tomorrow's number. Over on the sector side, we've got technology, discretionary, and communication services. The three aggressive sectors are kind of lagging. And the ones on the top are utilities, financials, materials, industrials. These are more of the defensive sectors. So that is not a good look for rotation. And you can see the industry groups down here. Home construction, interestingly, was the number one industry group today. If we look at that, it has just been brutalized for ever since back here in November. And today it got a bid, started going back up and actually just about ready to close that gap right there. So home construction and the home builders might be a place to take a look at. So that's interesting. If we go back over here, and heavy construction is there, pipelines, of course, mortgage finance, mining and gold mining. Those two are up in the top 10, and electronic equipment. And in the top 10 combined list, you can see the ones that are near the top. This one, Highland, actually had been sold off quite a bit, so it's trying to make a comeback. This is a quantum computing. It's kind of concerning that quantum computing companies, you can look at that little chart right there. It went from $20 all the way up to $90, and now it's right back to 20 again. And that's in the span of about a month. So that's how volatile those stocks can be. Whenever they have a huge run up, I recommend taking profits or at least selling half and then put a trailing stop on it so you can continue to keep your profits rather than just riding it all the way back down again. The ones at the end, WGS, interestingly, this one had just been staying at the top of the lists, the top 10 list for quite a while. And on the top 10 lists, since we just started the year, I'm doing it on basically a 6-month period. So probably the end of January. I'm going to go back to year to date. So it's only going to cover 1 month, but it'll give you a better view of the ones recently that are moving up. So keep an eye on that for the top 10 list. And if we go back just one page, Donald Trump had a huge day yesterday, pulled back quite a bit today. And let's go back one more. Lululemon pulling back some. Peloton looked like it was ready to start running, but now it's not. So all of these are right here on, this is my stock charts dashboard. So anybody, you can set these up for yourself. You can download this top 10 list right from the website for those that are subscribers on the charts page, and in addition to the top 10, which are right here. So notice Rocket Lab, that's one of the requests today, was in the #1 spot for companies that have beat on earnings and revenue. So that's good news. It was also over here in the IBD 50 #1 spot. So that's good to see. And then we've got the top 10 large, medium, and small cap stocks right here. And all of these then are combined into a CSV file. Not only these right here, but the ones that were previously on this. So a lot of times when it gets to the top 10, it's reached its peak. And sometimes that it will then pull back. And the pullbacks are what you want to buy when it's getting these really strong stocks, and then they start to move up again. And I consolidate all of those right here in this CSV file, which you can download and import into your own platform. And if you import that into stock charts and create a dashboard, you can get a list just like this. That's where this comes from for me. And that's what I look at right here. All right, let's go back to Chandelier Exits. So what are Chandelier Exits? Created by a guy named Charles LeBeau. I don't know why he calls it Chandelier, frankly. I'm not sure if this even tells you why. Not sure why it's called Chandelier, but at any rate, it's basically using the average true range. I talked about average true range quite a bit in a previous session when I talked about Keltner channels. They're based also on average true range. So if you want to understand that better, go back and take a look at that previous Technical Tuesday. But they essentially are a way to create a stop. If you want to understand, or you don't really understand where to put stops, put a chandelier exit on your chart like this, and that can be used for a stop. Now, how is it calculated? So what they do is it takes a 22-day period of the average true range and multiplies it by 3. So it's 3 times the average range a stock travels in one day. So that should keep you in for quite a while. Now, this is Clorox here. So you can see it actually breached the chandelier exit down here. So you would then have to make a decision. And you don't use these for entries necessarily. And you don't necessarily use them for hard exits either, but you use them in combination with other things. So it tells you when you should start being alert that something's going on. And we're going to look at these in a minute as well. Interpreting the exits. So you can see here, this is one that's actually on the chart. It helps with volatility, which is the average true range. That's what that does. 22-day, 3 times the average true range. And you can see in this case, this is the Qs. This goes back to 2013, and you can see how they've pretty much stayed above the stop. So if you set your stop slightly below where the average true range is, then you would still be in it for that whole run right there. You can also do the opposite. So the chandelier exit can also be a short exit as well. And it actually has one. In this case, you actually created by identify chandelier 22 period 3 times the ATR, but now it's the short. So it puts it over on the top of the price instead of under the price. So here's the long under the price. This is the short above the price. So if you are shorting a stock, then you can use this to identify when you want to cover to get out of your short. Now, if you understand how shorts work, whenever shorts cover, they have to buy the stock. So they have to buy it back, the stock that they have been short. In this case, it's GLD or gold. So what that means is above this chandelier exit, even if you're not using it for shorting, it would imply that there are buy orders, not only people that want to get in, but shorts that want to get out. There will be buy orders above this level. So you can interpret it that way as well. And I like to actually use both together. I'm going to show you that here in a minute. Use both of those together to identify really a solid confirmation of an entry point. So chandeliers for the uptrend. This is a chandelier, even though they changed the color. But in this case, it's ETN, Eaton Corporation. This is 2013 as well. And you can see it would have just kept you in even with these pullbacks. You could have stayed in the stock all the way up here until it finally breached it right up in here. And then that's the signal to get out because it's starting to move down. Now, one thing they say is can be used to capture short-term oversold conditions, but you should always use it along with another indicator. Again, I mentioned that it's not necessarily an entry or exit by itself, but using it with other trend following indicators like I have talked about helps you to identify where the exit should be. Now, in this case, you can see the gray here was 3 times the ATR. This is for shorting. However, it would have triggered quite a few times. So you can actually vary it based on how a particular stock acts. So in this case, they've changed it to 5 instead of 3 times. And then it would have kept you in the short through this whole period, right until here. This is the trend change down here. So that's the way to use the chandelier exit. It's for stop loss during a trend. It can help you to extend the period that you stay in a particular stock. The way you create it is, and I'll show you this on stock charts. I'm actually going to use the advanced charting platform. But there is an overlay or an indicator called Chandelier Exits. There's one for longs and one for shorts. It already defaults to 22 and 3 times the ATR, but you can change that if you want to. So it's pretty easy and simple. I'm going to actually show you this in stock charts ACP, but it's a pretty simple indicator to use. And I consider this definitely not a primary indicator. I don't even consider it a secondary indicator. I consider this a confirmation indicator, something to look at after you've looked at everything else, just to confirm what your thinking is. So let's take a look at this in ACP. This is stock charts advanced charting platform. I'm looking at AMD right now. So in this case, you can see that I have other indicators on here as well. And I've covered all of these in Technical Tuesdays previously. So you can always go back and look. There's a playlist for Technical Tuesdays on the YouTube channel. But I have up on the top the PPO or the MACD. I have the squeeze indicator down here in the middle, and at the bottom I have ADX, which I just covered last week, I think. So these are just confirming what the chandelier exit is telling me. I also have my standard 5-day, 21-day, and 50-day moving averages and the 200-day at the top up here. So those are just also confirming signals. So my short-term down signal is when the 5 crosses the 21. Medium term is when the 21 crosses the 50. Long term is when the 50 crosses the 200, which isn't even on this chart, somewhere way back there. But this is AMD. If you'll notice the chandelier exit in green, this is the long component. As AMD was going up right here, if you were putting your stop just below this, and maybe even in this case, because it's so close to the 50, you might have actually put it below the 50. You would have been stopped out right in this area right here, probably right here, where it closed below the chandelier exit right there. You could have waited till the 50 over here. But let's take a look at both of these charts. And the one on the right is the short version of the chandelier. So you can see them both together now. So let's take a look at when that happened and look at the other indicators to see how you use these all together. So on the top one up here, the MACD triggered right there a little bit before the chandelier triggered here. The squeeze triggered right here a little bit after the chandelier, and the ADX triggered right here, also a little bit before. So using all of these things in conjunction confirms that it's switching to a down momentum instead of up. It tried to recover here, but didn't. And it went below the zero line up here and stayed below zero all through this period, all the way through here, as well as the ADX, the red one above the green, and still has never gone back below the green. So, and you can see it on the squeeze chart down here, the momentum never went above zero. So you would have been out right here and you still would be out in this case. Now, if you went short, the short signal was right about the same time. Actually, it was a little bit before. So the short signal was right about there or right about there, just slightly. And you can look at the left, you can see the line moving on the left-hand side too. So the short signal was a little bit before the long signal. That's why using both of those makes a lot of sense. You can see the momentum indicators too. All of them were crossing over, so certainly a good short opportunity. And then you would use the Chandelier short exit as your stop for getting out of your short position. And in this case, you still would be in. So even over here, it never closed above it. And if you had your stop a little bit above the chandelier, you'd be short right here and you would still be short. So all through this whole trend going down right there, you would still be short. Now, one thing that I like to do is, and I actually have a signal for this. Let's look at it on NDX. So one of my buttons over here, the last one is Chandelier Exits. And what I've done is combine both the long and the short on the same chart. So the green is the long exit. The pink right here is the short exit. If a stock is above both of these, then it's really good confirmation that it's in a good uptrend. When it gets below both of them, then you can start thinking that it's beginning a downtrend, which it certainly did here. So it's below the short one still. So if you're using that to short, you still have not, in this period here, you still have not had a signal to get out or hitting your stop. So this is one of the buttons that I use. You can find all of my buttons for those that have stock charts. If you go to the chart lists and scans page on the right-hand side, you can see all of my favorite buttons. There's the Chandelier Exit right down here. I use Netflix as the example. So if you take a look at Netflix, it was above both of them all the way up until this period right here. And then it got a short signal here, but it didn't take out the long until it got over here. So this was the warning sign, and then this was the stop. So your stop would have been set there, but you would have been in this. It's actually above the green one, even off the chart. It's above the green one. So remember, when it gets above the pink one here, then shorts are covering. That means they're buying. So there's a lot more energy to push it up. So that's the way you can use my favorite chart styles. And these buttons are right here. You just click on it and then add it to your own stock charts chart. All right, so now that you know what Chandelier Exits are, I'm going to use this to take a look at some of the stocks that people ask me about. So one of them is CrowdStrike. So here's CrowdStrike. Number one, you can see it's now below zero up here. So the downtrend is now confirmed. The Chandelier Exit for the long side, it's basically going right along it, and it's below the 50-day. So this is probably where, if it doesn't really make a comeback pretty soon and definitely get above the 21, then you'd be thinking about getting out of this. But if you were looking at the other indicators, the ADX at the bottom, you can see it's already crossed, the red's crossed already, even though it's still above the chandelier up here. The momentum indicator, the MACD or PPO, crossed way back here. So that was the warning signal. And it continued going down even as this went up. So that's a negative divergence. And on the squeeze down here, it had a squeeze, but it is a bearish squeeze, and a brief one here as well. But you can see the momentum bars are still continuing to go down. So if this one doesn't recover and really start to move up, in fact, if it takes out this low from yesterday, then it probably is going to be heading much lower. The low from yesterday was the same as this low here. So that's at about 335. Let's call it 335, 334. If it goes below that, then probably is heading lower. Rocket Lab, I just showed you that. It was in two of the top 10 lists. Beautiful uptrend. The MACD is pulling back, but still above zero. You can see how momentum started to decline right back here. On the MACD at the top, also down here. On the squeeze, momentum started to decline. It's running right along its chandelier exit. So if this one doesn't start to recover and get above the 5 and the 21, especially if it drops below the 50 down here, then it probably is going to follow a downtrend with the rest of the market. And the short side, you can see the short side is already triggered over here. So if there are anybody that is short Rocket Lab, then they are looking at probably this area right up here to set their stops. So there are buy orders up here around 30. Both people that want to be long when it breaks out of this, and you can see it's in a squeeze over here, in and out of a squeeze, I should say. But it's 2 days of a squeeze right now. So for people that are waiting for the breakout, then they have orders to go long. And people that are short, that put their stops, they have orders to go long as well, right up here around 30, 31, right in that range. So if you're looking at this for a trade, then that might be the place for the breakout. You can also try to get in down here at the low, hoping that it's going to bounce off the 50. So that's at about 22. But right now you can see using the chandelier exits, you see how to use those. You would have, if you were using those right in this period, you would have had to make a decision. Is that enough? It's not even back to the 21 and the momentum is still going up. So I would say, even though it went below the chandelier, which means 3 times the average true range, it's right after earnings. So probably I wouldn't have gotten out right there, but that certainly would have been a warning. And then it continued to follow this up. And it's the same thing right here. It's got 2 red bars now. I covered these bars in a previous Technical Tuesday for anybody that's interested in looking at those. All right. Another one is palladium. So this is a metal. I'm not tracking this in my bias matrix. Maybe I should. I'll think about that. But although volume is really light down here. So again, looking at this with all the indicators, and here's the chandelier exit. It dropped through right there. So you hopefully would have been out if you were in it. There's the MACD cross below right there. It's still below zero, so confirming a downtrend. The red line on the ADX crossed over down here. It tried to make a comeback, but didn't. Even though we had this little up signal right there, the red is still above the green. And the 25 is right about there. Actually, didn't put it on this chart, but I should have. 25 is right there. All of these are below the 25 as well, except for the red. So right now, it looks like it's trying to make a comeback, but it's below the 200-day. It needs to get above both of those, I think. This is a risky play, although it looks like it's been hitting the bottom, so that could be the bottom right there. But for me, I would want it to prove itself a little bit more. But if you wanted to take a risk, I would if I did get in at 85, what's it selling for right now? 86 right now. So stop down here around 82. And the short, you can see on the short side, it went short right back here, and it still has not gone back above it. So on the short side, at 88 right here, which is just at the 50 and the 200, just above that, there are probably lots of buy orders with shorts setting their stops up here, probably right around the 200. So those are buy orders that will execute if that gets up to that point. So that's palladium. 2 others didn't really ask me to look at them, but they just mentioned them. I'm going to look at them because I'm curious. One is United Healthcare. Huge decline right here, of course. Some of this was related to the shooting, although I think it was starting to go down even before that. 12.5. That could be when the shootings occurred, but it continued going down. You can see the reds below red's above the green, but the green is just crossed over. Momentum is just crossing positive. It's starting to head up. It's now above the chandelier exit. So for those that are in or getting in, it's now just above the 200. So there's a lot of good signs here. It still needs to get above the 50, but everything else looks pretty good. The momentum is starting to track higher. Your stop would be down here. So, this is around 512. So actually, it looks pretty good right now. Might be recovering. Here's the short chandelier exit. So these people are already covering their shorts right here. So this is probably one of the reasons it's starting to move up the last couple of days, because of short covering right in this area right here, and especially when it gets above the 200. So that looks interesting. And then the last one is Eli Lilly. Lilly had a bad day today. Looked like it was trying to move higher. I actually covered this, I think, a couple of days ago. It's below zero up here, so confirming the downtrend. The red and green, we're just flopping back and forth through here. That's usually what happens when you get ready for a squeeze. These will just move back and forth. But now the red has definitively gone higher. So the squeeze now, I think, is firing to the downside. It hit right at the 50-day moving average, never got it back above the 200. And now it's continuing lower. And if we look at this with candlesticks, you'll see big red candle right there. It's got support down here at 717. So if it needs to hold that, and huge volume today as well. So I don't know if there was news on Eli Lilly today. I don't know, but the chart looks like something happened. On the short side, you can see it went short here and pretty much stayed below, except for this one little period here where it was trying to recover. And one of the things you do when something like this happens over here and it goes above the short exit, you want to look at the other things like the moving averages. So both the 50 and the 200 right up here. So you hopefully would be thinking it's probably going to get rejected right there because it's in such a downtrend and it's below zero up here. And that's exactly what happened. So it went down and still has not gone back above that that exit right there. If it does, there's probably buy orders up here around 845 above the 200-day. That's where these shorts will probably exit. Actually, the shorts probably from way back here, probably way back here when it went below this short line right there. All right, so that's it for today. Thanks for watching. That's Technical Tuesday. Let me know if there are any indicators you want me to cover that I haven't covered yet. I'm getting kind of low on the number of indicators that are out there, so I'll have to figure something else out. Tomorrow, I'm going to cover inverse ETFs and leveraged ETFs. So stay tuned for that on tomorrow's show. Thanks for watching, and watch out for inflation tomorrow. Talk to you later. Bye.